It's nice to talk to you guys again. It's Talking Technical again, and well, we've got some nice requests, and it looks like some of the investors they still looking for some opportunities. I'm a little bit nervous. I mean, I'm nervous for a couple of months already, but the market is steaming ahead. Everybody's happy. Nothing can go wrong with markets. The place to be and to make your money is to put your bets in the stock market. That's what the New World say. The New World say, forget about everything. Unemployment, COVID, nothing can stop the market. The only thing you do is you buy and you buy again. And the beauty is you've got a big daddy supporting you, and that we call Federal Reserve. And the Federal Reserve will back everyone, and you will just make money. The only thing you need to do is you must apply for a grant, and then what you need to do is you take some of money of that grant and you buy some shares, and then the market goes up. And the only thing you need to do is you need to wait for a vaccine, and everything is sorted. So, but I've got a surprise for you. I've seen many corrections in my life, and believe you me, if they come with a vengeance. And everybody that think that markets are just going up forever, be surprised. You'll also see a correction in your life and experience that shares can maybe go down for a while. Let's kick off with gold. And gold is a big issue. Everybody loves gold, of course, but I'm a little bit worried. I mean, even if you look at the gold price here, the previous time that we did gold on the show, we showed a symmetrical triangle. And the symmetrical triangle was looking like this. And we said then that the share or the gold price must break above this resistance line. What I see here is I see that gold is almost losing some momentum. Look at it. There was the beautiful high of around just above $2,000. Then it came back. It tested this line at around now 1,950. Then it went back, test this line at 1,913. But now we're heading to test this line. And this line, unfortunately, is waiting at, there is the level. There you are. There's the level. This line is waiting at $1,745. Unfortunately, if gold breaks above 1744, what can we see? We can see that this symmetrical triangle, and I know nobody will believe me, but this symmetrical triangle can take gold all the way back to $1,300. Well, I really hope that it doesn't happen, and because a lot of the investors love gold, especially in uncertain times. I think what's happening now is that because there is no uncertain times left, only thing is you do is you buy shares because they're looking a little bit forward. In some cases, if you look at some shares, they're looking 4 years and 5 years forward, but nobody worries about that. I don't like this gold chart. This gold tells me that investors are not nervous and that they're complacent and they don't feel any worries about anything, and they're just happy to carry on, and there's no fear at all in the world. Only place where I can see that gold can maybe pick up again, if it breaks above 1,830, then of course this whole scenario can turn around and it can take the gold price then much higher. So while we're in limbo here at the gold price, we'll see which way it breaks. But for me personally, I'm a little bit nervous because even some of the gold stocks, they also not looking that healthy on the charts. So maybe they will surprise us. We know gold is an instrument that can surprise you, but we'll have to see. Well, let's have a look at Apple. And very interesting, I think there's some very clever investors phoning us and sending us some requests. And I think they know that some of these markets had some massive rallies. Well, Sally asked us about Apple. Now, Sally, if you look at this chart, of course, there's nothing wrong with this chart. The world is happy with Apple. I mean, there's not a person in the world that does not use Apple. But what I look at this, and this, remember, this is a weekly chart. We always look at weekly charts on the show because a daily chart is almost for almost for a trader. But I mean, if you look at this chart, Apple is still looking fine. But what do we see here? We see a ugly rising wedge. Let's just zoom it out a little bit. You can see here. There's the rising wedge. And we're just on the brink of breaking this wedge. Now, I know some of the long-term investors will just say, Frans, don't worry about rising wedges. The market goes up and just see. I mean, Apple went up from 40 to 140 in a matter of a year. I mean, it will just carry on. But I'm a little bit nervous. Look at this rising wedge. This rising wedge is, of course, a warning formation. And if it remains below this $133, the rising wedge can maybe take the share, and now everybody say, what on earth? He's worried about a tiny correction, and the share just almost doubled in price just in a few months. You can take the share maybe down to about 111. I mean, that's a tiny pullback, but I mean, it's still a pullback. So what I say is, don't buy it now while this rising wedge is in play, and you see this chart is warning. Don't buy now, and just wait for the share to show that there's some new momentum again. So Sally, I think maybe you're right. Nervous on Apple, and I'm also nervous because this support line, if that changes in the resistance, this rising wedge will trigger a correction. Well, if we look at Amazon, Phil is asking about Amazon. I mean, can you have a better company than like this? Is one of the world leaders of the world. I mean, absolutely a stern company, brilliant results, and they are just dominating the world. Now, let's have a look at Amazon here. And here we are. We can maybe see a nice flag formation here, Phil, because the trend is beautifully up. Look at this rally from March 2020. Of course, and we know now that was the period when the markets had, let's call it a breather, because a correction of 3 weeks is not a bear market or a proper correction. That's just a tiny correction, 3 weeks. It went from $1,800 to $3,200 in a year. How's that for you? I mean, that's quite a rally. But if you look at here, this sort of symmetrical triangle right at the top, you can also call a nice flag formation. And this is one of two scenarios. If it breaks above this resistance line, and that is waiting at $3,375, then you know it's a continuation pattern. Then we can go again another leg higher, and nothing can stop the stock. And there's the high. If it goes above 3,414, the momentum traders will just climb into the stock, and they say, well, the target to go for is 3,800, because it is exactly the extension there. Well, on the other hand, if it breaks below 3,159, Paul, the guy asked, was Paul asked, what will we do? And I said, if it breaks below 3,159, it may be time to take some money off the table. Amazon had one beautiful rally. Could just be a little bit nervous, but I mean, this is a continuation pattern if it goes up. Well, let's have a look at Netflix. Mohammed say, well, he's a keen client of Netflix, and he's got the shares, and he's happy, and nothing can go wrong here. Well, let's have a look here. This is the weekly chart of Netflix, again, on the brink of a brand new high. And if I use this normal, let's you call a support line, there's a beautiful support line for you, telling you that the stock is in a beautiful uptrend. And let's have another move here. We'll combine that one. And what do we see? We see a beautiful rising channel. But I can see the start of an early signs of maybe a rising wedge, because this gap here is a little bit narrower than that one. So maybe in time to come, we'll probably see a rising wedge. But at the moment, this chart looks like the momentum is clearly to the upside. What does this chart do? It goes every time to this resistance line, pull back to the support, go up. Well, this one time it failed, but then eventually it got to that line again. And we're right in the middle now. So Mohammed, it's simple. If it breaks up this line, and there you are, I think it must break above that high. That high is $574. If it can break above that, another leg to the top. The shares just know one way, and that's up. But if it breaks this line, and there's, I just want to get the proper level there. There you are, there's the level. $510. If it breaks $510, it can maybe pull back all the way down to this support line there. I just want to show it. There you are. And maybe pull back to 418. So just be careful. I mean, but Netflix, beautiful stock. Nothing wrong with it, making good money, good returns, but Mohammed, just a little bit careful. He had a massive rally. Well, let's have a look at some local stocks. Martin asked us about Coors. Let's have a look. Well, this is one of the charts that I still like. And the reason why I'm saying that this is early movers. I mean, some of the shares are right in the sky. I mean, they rallied fantastically. Look at Truers here. There was the low. There's a higher low. There's another higher low. This is a normal weekly chart here. But let's have a look here. It broke this line there. Early signal that the momentum wants to turn to the upside. There you are. Let's have a look at this, if it can break this resistance line. Yes, it did that as well. This is a good chart. This tells you that there is buyers around. Momentum wants to turn to the upside. Yes, we had a strong rally from January. I mean, from 35 to 48 Rand. That's quite a strong move. I think while the stock is moving above this line, even if you are a long-term investor or even a trader, if it is above this line, there you are, above 38.90, the momentum to the top will be in play. And you know why? If I'm looking at this chart, Christelle said to me the other day, she's got one stock where she's got beautiful returns on. What does she do? Does she just lock some profit in because she's so happy with the profit? And then she said, but my biggest fear is when I sell the stock, when will I get back into it when it pulls back? And then I answered her, when the stock comes almost from the right out of the pits, and you see this rally, sometimes just use a little bit of a bigger protection to preserve your capital or your profit. And just hang on to the stock, because usually it pulls back and then goes up again. And sometimes it never pulls back and it just goes up and up and up. So use that formula. Be happy with your profit, but sometimes you can hold on, but use maybe a wider protection. Well, thank you for watching the show. Visit our website, www.fransklerk.com, and we will chat again.